I'm Dave Mecklenburg from Tiger Shark Trading. Today we're going to talk about pullbacks. But before we begin, I do want to remind you of high degree of risk in trading. If you've been trading for more than one day, you know that you can and will lose money trading. Only trade with money you can afford to lose. I know we've got some new people coming through today, some cross promotion I was doing. So just very briefly, I got in this business, I guess about 16 years ago now. Working at Trading Markets, that was the first publisher of trading books, and then eventually courses, services, all that good stuff. There's Street Smarts written by my old boss, Larry Connors, published in 1995, cost $175 for that. That's about $260 in today's dollars, so you can see it was expensive even to get at books back in the day. I tell you this because, number one, I learned to trade the same way as you. I read a bunch of books, went through a bunch of courses or online courses, all the things you guys have access to. Number two, no one had all the right answers. No one will have all the right answers for you. There's no one you're going to be able to copy exactly because we're all going to have different situations, particularly account size, level of skill, risk tolerance, even available time. So in general, people who write trading books or put on trading education, typically more skilled than the people who are obviously purchasing the education, and typically have a much higher risk tolerance as well, willing to lose much more money per trade, much bigger drawdowns. So keep that in mind as you look at stuff. I don't have anything to sell you here, but again, I'll have a strategy for you. It's up to you what you want to do with that. And then the last thing is, look, I've been talking to people for 16 years now here, talked to thousands of people. I'm an expert on how people like you lose money trading. So again, do use me as a resource. Ask me any question on trading. If I don't know the answer, I can point you the right direction. Also want to let you know, this is kind of a two-part lesson that I do. So I do a pullbacks lesson, and then I'll follow it up with trading pullbacks with RSI. So I'll do that RSI lesson. Actually, I'm going to do it on Tuesday. So again, the context of this lesson, any lesson I do, any guest of mine, since I have frequent guests, that number one, trading's hard. This doesn't sound weird for me to tell you that, but again, most education, most presentations basically present trading in such a way that if you just do these things, or if a damn dirty hillbilly like me can trade, so can you. These are all implying that trading's easy, and it's not. So if it were easy, everyone would do it. No one would work in farms, work in factories, all that good stuff. So if you believe trading is hard, if I can convince you that trading's hard, you're going to do a lot of things differently, right? Like, hey, do a lot of paper trading and maybe simulate it. There's no reason not to simulate trading at this point. It's built into most trading packages. So, and if you can't make money simulating, you're not going to make it with real money. So again, if you remember trading's hard, you'll do a much better job of preparing yourself, not just throwing money at stuff, not just believing someone's selling snake oil, all that good stuff. You'll accept the fact that it's hard, and you work around that. So the corollary to that is that no one is actually selling money printing machines. There's nothing you can purchase that you can hook up to your computer and start printing X amount of dollars tomorrow. There's nothing I'm going to tell you today that's going to print money for you tomorrow. Again, usually that last bit, that last 10, 15, 20% you got to do for yourself, because your particular situation, as I said, like, we're all different. We can't really replicate anything that someone else is doing because our level of skill, our risk tolerance, our psychology, all that stuff. So like I say, you're going to do that last 10, 15, 20% for yourself to adjust it for your particular situation. So whatever you purchase, great, or whoever you're listening to can run you up the learning curve, but you're going to have to do that last bit for yourself. All right, so I'm going to give you a good idea today. This is the biggest, most prevalent and even easy to use strategy there is, pullbacks. But you know, look, it's not there as really as a complete strategy. So again, you're going to have to investigate it further. If you don't want to investigate it further, I guess it wasn't for you. No problem. Maybe you can find something else. If you don't want to investigate any trading strategies further, well, I guess trading actually isn't for you. So I'm going to encourage you to put in the reps. It's the only way you're going to learn. You're going to have to flip charts, look at stuff, make it a habit, come home from work, look at charts for 10, 15 minutes a day. You'll know how to trade when you put in those reps. All right, and then hopefully the more time you spend with me, the more I can help you stuff out total nonsense that isn't going to work for you. And again, isn't going to allow you to print money because you bought something. All right, so I usually do this keys to a trading strategy every lesson I do. I say there's 8 keys. You don't have to have all 8 in a strategy. Generally, I want 7 out of 8. I believe in this strategy, I actually have all 8. All 8 of the ones I always list are going to be part of this strategy. All right, so number 1, control our risk. Think about the downside before think the upside. Hey, a stop. It's one way to do that. Various ways to control risk. You could, use an option. Can't lose more than what you paid for the option. You can do baskets, long and short. But we got to protect ourselves from the downside first. We got to worry about our costs. So again, commissions would be the most obvious, but can I consider wide spreads and slips to be a cost? I can consider people using options as a proxy for a strategy that really would be better for stocks and futures to be a cost, because again, the spreads are much wider, or it's more costly to get in and out of positions. It's not as liquid if you use options, but again, we got to control our costs. 3 simple is better than complex. Again, the higher the level of complexity, the higher the likelihood of errors. But also simple just seems to stand the test of time. Markets drift, markets change, strategies stop working, but simple strategies just seem to stand the test of time. Gets outside the noise, gets outside the big money. Range, volatility, whatever we want to call it, it's got to move. Whatever we're trading needs to move. Penny stocks aren't going to move. There's no money in that. So again, want things that kind of move every day. So generally, for trading stocks, I like to look at the S&P 500. Those are stocks that move every day and are liquid. You're able to get a good fill, all that good stuff. For the trend is your friend. A lot of this stuff, the trend following moron, this comes from trading pullbacks. Right, so we want to be on the side of the overall trend, not just on the side of the overall trend, but also the near-term trend, or that trend is speeding up, the momentum. All right, so guessing tops and bottoms, generally a loser's strategy. Guessing that the pullback is over. Right, we'll let price tell us that it's resumed. Right, that the trend is resuming, that the momentum is moving in our favor. That's a way to trade pullbacks, and will this be more obvious once we pull up the charts? Confluence of leading indicators. So again, everyone would say, well, all indicators are actually lagging because they're a derivative of price. But what I most care about is, hey, are you looking at price charts? Basically, I want to know my my entry and my exit when I take the trade. Right? What's my entry? What's my stop? And maybe even what's my target? Something like pullbacks over a longer term. Maybe we don't have exact targets because we're going to stay in the trend, but we want to know these things ahead of time. So whatever our indicator is, it needs to print across the price charts. So if you're looking at RSI, MACD, stochastics, or any of these off-the-shelf chart indicators for your charts, if you're looking at RSI and waiting for it to hit 35 for you to enter your position or exit your position, whatever you're doing, you're not looking at price. So that's really my key thing. If you're not looking at price, if you're looking at indicator, not looking at price, you're looking in the wrong spot. So for me, a leading indicator is anything that prints across the price charts, not below it, but on it. So, hey, your major moving averages, your 20, your 50, your 200-day moving average. Look, everyone's using it. Big money uses it. Doesn't change during the day and just a little bit at the end of the day. Fibonacci, Elliott wave, trend lines, but even better, recent highs and lows. So today's high, today's low, yesterday's high, yesterday's low. And so, hey, if yesterday's low lines up with the 50-period moving average, that's a confluence of leading indicators. And then our last point here is targets significantly larger than stops. So as an individual trader, your edge will be very small. You're going to be right about 50% of the time. So how do you make money? Well, it's because your winners are bigger than your losers. Now, again, easier said than done. We're wired to do the opposite. Our psychology is wired to do the opposite. It's not a loser until you close out your position. So, of course, when you're in a loser, you hold it so that it turns around and you can get out at break even. But, of course, your loser becomes an even bigger loser. And of course, you're wired to lock in those profits early because, hey, if it comes back to break even, you gave back all that money. But the problem is winners become even bigger winners. So we just have to train ourselves. We do that through repetition of cutting our losers once we're outside of normal volatility. You know, we don't want to just have stops that are so tight that we just get whipped around just a normal volatility. But once we're outside of a normal volatility, hey, we're going to cut our losers. They'll be part of our plan. And we're going to ride our winners to be even bigger winners. Right? We're going to train ourselves to accept the fact we're only going to be right around 50% of the time. Again, we're wired to want to be right. Many of us, you'd be happier being right 80 and 90% of the time and earning less money. But again, the whole point of this is to make as much money as possible. So you have to train yourself to accept the fact that you're going to be wrong about half the time. Again, easier said than done. All right, let's get into a pullback here. That's kind of all the basic stuff, or the building blocks of all this. So again, I'll pull up examples of this as well. But we're looking for a trending stock, right? Trend should be obvious. We don't need a measurement for that. We don't need an indicator to tell if the stock is trending. It's obvious it's trending. Recent high or low. So again, I like to have symmetrical trading strategies. Same rules, only opposite on the short side. So I'm looking for a recent high, or I'm looking for a recent low if I'm going to short. Again, generally I want to be above the 50-day moving average. In some ways that is a trend filter. It makes it easy to see that you're in a trend, but it also makes it easier to run a scan on this stuff here too. So above the 50-day moving average, or we're going to be below for the short. Pullbacks, looking for 2 to 7 days. Once, at some point you got to cut it off. At some point it's actually a change in trend. We kind of find that maybe 7 days is about right. And we want to enter on the resumption of the trend, right? We're not going to guess that the trend is going to resume. We're not going to guess that the pullback is over. We're going to actually let the trend resume before jumping back on. So I'm going to show you a couple different scans here, just so you guys get a feel for running your own scans. You understand how to kind of build this. Ultimately, the issue with pullbacks when you run scans. So my longtime buddy here, Dave Landry, who wrote books on pullbacks and swing trading, all that good stuff. Look, he looks at, I don't know, 1,200, 1,500 charts every day, flips through them. And your eyes are really easy to train to look for pullbacks, but I want a shorter list. But the issue when you run scans on pullbacks is it's kind of hard to run a perfect scan on this. You're going to have a lot of false positives. So whatever you scan, you might end up with 100 stocks that meet a criteria. You're still going to have to click through 100 to throw away 90 and save 10. All right, but these are some scans that I use or have used. This is O'Connor's 1, 2, 3, 4 pullback that's built into Metastock. I use Metastock and TradeStation for my stock research. You'd be able to do something similar, most of these, but this is built into Metastock, and that's actually kind of why I use it, because it's kind of a complicated scan. And Connor's, like I said, he's my old boss, and then that setup was in various books. Basically allowed for inside days. It was a pullback that allowed for inside days. I forgot all the rules or why it was called 1, 2, 3, 4, and why you always had to have these special names for everything. But like I say, essentially allowed for inside day. And he used to use trend filters like ADX, which we can see in here. But again, I just used it because it was built in and it gave me a tighter list. And this used to be the scan I put on the website. I actually have a much wider scan now, but this is the one I did have. And then I would just throw in, I would just add in, hey, just close above the 50 and the 200. Then we know we're really in a trend on this as well. or the longer term trend. All right, so my own scans that I build in say Metastock, and you can use something similar. This is Metastock code, but I'll read it in English so you can build your own scans as well. So this is a very loose scan. Sometimes I want a loose scan, or I know the market's doing something where I have to check more stocks. Again, I want a bigger list that I got to click through so I can maybe find something. But let me just read this to you so you understand this, so you can build it and whatever else you use. So in Metastock, you've got to, if you're not talking about today, you got to reference something. So that's what that is, reference. So I can use C or close. You can use either one. But so that means today. But if we're not talking about today, then I got to reference it. So we're referencing the high, H high, 2 days ago is greater than referencing the highest high value, high 100, 3 days ago. All right, what that is, it's a new 100-day high. All right, the 100-day high 3 days ago just got beat out by the new high. That's all that is. It's a new 100-day high. So I'm looking for a pullback off of a recent high. 100 days, why do I use 100 days? Well, the thing is, it seems about right for me. We don't need a 250-day high or a 52-week high, which ends up being about 250 or 260 days. But about 100 is fine to really to know you're in a trend. We're just going to pull back off that new 100-day high. That's all that says. So we just put in a new 100-day high 2 days ago, and today's close is under that new 100-day high. That's all that says. All right. So that's a 2-day pullback, right? So again, we talk about a pullback being built around 2 to 7 days. So this is why this stuff becomes a little unwieldy, is you got to do that for 3 days, 4 days, 5 days, 6 days, 7 days. All right, you can keep going back. All right, and this is a loose scan, but all it is a pullback off a new 100-day high for 2 to 7 days. That's all that is. All right, so I'll give you a loose scan. You click through a bunch, you throw away all your false positives, and you got your scan. Now this one's tighter. So again, we could keep tightening this up. You could do a tight one, but the problem is you're going to miss some good stuff, is what you're going to find out. That your eyeball actually is pretty good at clicking through this stuff, and you're going to find some stuff the more you click through that maybe wouldn't pop. But here's that same element, that same pullback off a new 100-day high, right? That's what that first part is, new 100-day high 2 days ago. Or a pullback off of that. And so if I throw this in, this gives me a tighter scan here. Today's close, so C or close, is less than yesterday's close. And today's close is less than today's open. So I've got a down day, close to close. Today's close is less than yesterday's close, and a down day of open to close. So intraday, down day. So basically that gives me a down day, a nice big red bar, which we'll see on these things where generally we're going to have that red bar, right? I want to have the lowest close on this pullback is what I'm looking for. And so just adding this little bit just gives me a tighter scan. Seems to work. It's a nice tighter scan. Look, you could add more stuff in. You could have this is a lower close to close. You could do a lower low to, low to low, high to low. So again, you can be more specific on all of this stuff if you want, but tighten it up, but you're going to end up missing some good things. And we're going to see that on today's pullbacks, that if you're a little bit looser, you got more things to choose from. All right, so again, you're going to have to do this for 2, 3, 4, 5, 6, 7 days, and you can see where this, again, becomes a little unwieldy or a lot of code in there. But this is actually the general scan that I use. I try to use this one, unless I don't have too many stocks like I didn't today. And then I'll try to loosen it up or use that looser one. All right, so you can just stop the recording if you're going through this stuff. Just again, understand how to build this, and you can build it whatever programs you're using. All right, so again, remember the elements of the pullback: trending stock, recent high. I used 100-day high or 100-day low, above the 50-period moving average or below for shorting, 2 to 7 days, and to resumption of the trend. Those are the elements. Let's look at some charts here. So again, trending stock. Here are my 20, my 50, 200-day. But again, right, trend should be obvious. I use the Dave Landry methodology. Hand this chart to a 5-year-old child, and you ask them, which direction is this chart going? That child would tell you this chart is going up. Right? We don't need a trend filters or an indicator, ADX, any of that stuff. This is obviously trending up. Right? We've got a nice 3-day pullback off of this. We got our red candlesticks here. So again, what we want to do here is we want the resumption of the trend. So if we break the high on that last pullback bar, that's how we trade pullbacks. Again, I'm going to use dailies here, and I'm also going to use stocks. But again, we could do this on any time frame, any market. The principles are absolutely the same in anything here. Right? Essentially, we're getting a better price. We're getting a better price in whatever we're trading because of the pullback, long or short, better price, and waiting for the resumption of the trend. Like those are the keys, right? We're interested in something, we'll get a better price, but we're not going to try to guess tops and bottoms, right? I'm not going to just buy here at the close because, oh, it's a 3-day pullback. No. We're going to break the high of the last pullback bar. That's our entry, right? We can just see that. And then our stop, obviously on the back side, but it's got to be wide enough to not be knocked out by normal volatility. So here's kind of our pullback low here, which kind of lines up with this low here, but this might be a little tight here. Maybe we want to be on the back side of the 50 to give it some room, and we can do the math on this of whether or not that stop is acceptable or not. It's kind of an expensive stock in this example, so maybe that's probably pretty good. Again, if we're doing day trading stocks, if we're doing stocks, trading pullbacks on stocks, I'm doing longer term here just because it's more applicable to most people. Most of us have retirement savings, and this is you taking on a position, trying to hold as long as possible, stay in that trend. All right, there's lots of huge winners that behoove you to stay in that position for years. Just stay with that winner trade. All right, so we'll have a bunch of examples here again. All right, so break the high of that last pullback bar on the long side, stop on the back side, but it's got to be wide enough to not get knocked out in normal volatility. Certainly if we're holding overnight, again, we need to have somewhat wider stops because of overnight volatility, gaps, and all that good stuff. All right, so again, obviously trending stock. So 4-day pullback, again, if we break the high the next day, triggers a trade. Again, here's our kind of pullback low. It's kind of on the backside here. Again, maybe better beyond this other pullback low on the backside of the 50. Better place for a stop, but again, stay in the trend for our target. So hey, what happens if it doesn't break the high the next day? Okay, well, no trade. Perfect. All right, it's lower. Great. We got a better price. Now we use again the next bar. All right, that's what goes on here. Right, this was a pullback here. Right, never triggered, didn't trigger. Great, keep getting better price. All right, trending stock, pullback, can break the high of that last pullback bar. Here, in this case, got maybe a consolidation going on the backside of the 50, probably a good spot for a stop. So if I'm holding this long term, I want to stay in the trend, just in general, stay above the 50 and eventually move it out and stay above the 200 to stay in trades as long as possible. If you're swing trading or smaller term, maybe you want to do it based on days, hold for a few days, or again, just make sure your target is significantly larger than your stop. Obviously, if you're day trading, hold as long as possible, so close your position before the close of the session. All right, obviously trending stock, pullback. So here's the inside day, right? And that's okay. I know it ended up showing up red here, but that's an inside day. So sometimes you have inside day that might throw off your perfect pullback here of down days, all these down days in a row. But again, break the high of this last pullback bar. If it triggers the next day, here's our kind of pullback low here, puts us on the backside of the 50, probably a pretty good spot for a stop. So here's an example I pulled where why I use a 100-day high, because we can see this is not a 52-week high, but it kind of rolled over, all right? Rolled over here. Our 200 is still above our 50, but this is trending, recent high. And this one also already triggered, I pulled it, right? So break the high of this last pullback bar right here. So we triggered the trade right there. Now we're in a stock. In this case, maybe the stop's on the backside of the 200 versus the 50. All right, again, downside, same rules, only opposite, right? Downtrending stock, it's obvious, a recent low, pullback. We're gonna break the low, that last pullback bar, right? Stop maybe on the backside, or here's the backside of the swing low. Here's one that already would have triggered. Again, obviously downtrending stock. Here's your recent low, a 3-day pullback, pops you in, breaks the low of that bar. Now you're in the trade. Maybe the stop was on the backside of your pullback highs here. Maybe you want to be on the backside of the 50 when you trigger the trade. Again, when we look at stocks that I have set up for tomorrow, I'll do a little bit more detail on targets, especially on the short side, because they're going to be a little bit different from the short side. Obviously, not going to hold for years and years if we're shorting. All right, so those were all examples I had for you. This is where I posted on the website here. So under pullbacks, pullback traders, I post the scans every day. So you can see, like, look, I had a bunch. So obviously if the market is moving and then it has a few days sell off, I'm going to have a bunch of stocks, right? That's just how it's going to be. So look at the overall market. It's going to give you a bunch of stocks doing that. So now we had a big up day as the market's been trending recent highs and then a big up day. So I just don't really have too many stocks ends up being on the list. But this is my list, and I even have a bunch of stocks I'd normally toss and not have on the list because they're too cheap. These are all S&P stocks here, like even worst case S&P 600. But again, they're low price. Like Dean Foods is $3, and shorting a stock at $3 probably not worthwhile. But I left it in here just because the charts are pretty good, are pretty good examples. So we can maybe more imagine it was a more expensive stock, but we can just see this, right? So obviously a trending stock. Let's do Bank of America first. Trending stock here actually dropped below the 50. Again, I typically prefer to be on the other side of the 50, but once it breaks the high, maybe we're back on the other side of the 50, or maybe you let it break the other side of the 50, wait for the entry. But so if it sells off again tomorrow, maybe we don't want it. Nah, it's not because we can't pop back above the 50. But again, this is a trending stock. And a pullback, again, break the high of that last bar. In this case, a little harder to find a stop on something like this, but not really too much of an expensive stock. The low of this kind of pullback is here, so just push it out a little bit. Maybe you're okay. CMO, again, obviously trending stock, 3-day pullback here. Again, break the high, trigger a trade. Doesn't break the high tomorrow, hey, no trade. Got a better price perhaps. Again, maybe stop on the backside of the swing low here. Downside, same stuff going on. Like I said, I got some stocks here normally I'd throw out, like Dean Foods here. But again, recent low, can break the low of that last pullback bar. So if I'm going to target something on this, I like to get inside any recent lows, like over the last year. You can see there's really nothing there. So sometimes I don't want to trade that. But again, Dean Foods not going to give us anything because it's a cheap stock. But It's a nice chart. Same with Diplomat Pharmacy, but here's an example of break the low of that last bar. We can see how we can target down here some lows from last year. So that's really more of the targets I would look for if we're shorting. So again, break the low of this bar. Trigger the trade. So again, generally, I throw away Dean, it's too cheap. This Diplomat, cheap. QHC, $2 stock, cheap, but they gave us nice charts though. If that stock was $20 more expensive, that's a pretty good chart, what we're looking for. Generally, if I'm holding long term, if we're talking about retirement accounts, can't shorten a retirement account. We're just really looking long term. But again, I like to have symmetrical trading strategies. Same rules, long and short. All right, so Bank of America, pretty much, and CMO, pretty much it. CMO is the best looking one. Again, I just didn't have stuff today, and that just happens. We run scans every day, but you guys can go back in time and look at this stuff and just see what happened and look at these stocks, flip some charts. All right, so any questions on this strategy? Also, I'll stick around and answer any of your questions on anything to do with trading as well. And I also want to remind you, I'll add RSI to this strategy, and I'm going to do that next Tuesday. All right, let me shut the recording and do your questions.